Good morning, everyone. I wanted to do a very special video. I'm going to start breaking down videos on an individual basis so we can keep everything separate, neat, and organized. In this particular video, I want to go over gold, Xauusd. Now, for the past couple months, I've been trading gold. I've had some good days, but I've had plenty of bad days. So what I ended up doing was walking away from gold because it just looked like it was too much of a choppy market for anything that I was really used to. So I left it alone. But in this video, I'm going to go back to it. And I want to start off with a weekly, see my fundamental bias, see where price was at this time a few years ago. And initially it was bullish and about 80 to 100 points from monthly highs, 1706, maybe 1726 from here would indicate change in bias. So price did hit 1726, indicating that it's a new downtrend being formed. Therefore, this uptrend that actually lasted a couple of months is now ending and is under pressure. So knowing that, I'm looking for bears. My hard bias is going to be bearish. So now I'm going to go into the 4-hour time frame, and I'm going to just look for potential zones to trade in. On the 4-hour time frame, I'm going to use my Fibonacci tool to find the most relevant swing high to swing low. I see price has been trending down pretty fairly this entire time. So there's no real reason. Let me actually delete some of these, keep a clean chart. And let's do this again. So swing high to swing low. We have price trending very fairly down to the zero. So my projections from here is going to be, it's going to go all the way down to the fib extension. This is about another 280 points away, around 1705, 1706. So to finish this narrative, knowing that it's going to go down, there's about another 30 points for gold to go, and we are currently in a very strong bear market with a slight pullback. That's adding to my narrative. So now I'm going to add some touch-ups by finding my entry bias, and then I can go into the amount of pips that I'll be willing to risk. So right now we're on the hourly, and we see that gold has been trending, has pretty much had a healthy trend the entire past week. So a lot's happening, but we have to stay focused on the bigger picture. The bigger picture is this: from 1787 to now, we have a strong bear trend. The problem is it's way too many pips because we're not trying to risk, 50, 60 points just to find out if we're wrong or not. So I'm going to box off certain regions that's on this time frame and go from there. So do we have any strong, large time frame regions? Yes. We have one down below at about 1693.75. And I want to do just any more towards the upside now. That's the most recent down box region. And on the upside, there's a lot of bounces from this area, roughly around 1777. So I have my boxed off region. Now I'm going to go into the 4-hour to see which one of them I'm closest to. So we can see that right above the 0.786, we have a stop zone. That's going to be our stop zone on gold. But we are kind of far away from that, so there's no need to really worry about that getting hit anytime soon. But the next problem is the amount of pips. So if I want to just invest in this and in the long term know it's going down, this is all I need. But I'm a day trader, so we're going to go down into the hourly and find the amount of pips that's necessary. So on the hourly, we see a couple areas of confluence. That's what I'm going to mark off right now. We see support being messed with quite a few times around this area, 1744. We see it bounced off once, twice, 3 times before it closed below and it became resistance, and it's acting as very strong resistance right now. So 1744.75 is probably going to be my most recent area of resistance. Now, I'm going to be trading this from even smaller time frame just so I can get the overall exit for gold. Now, as far as my exit plan for the downside, there's nothing else to the downside. So I'm actually going to take this trade right now with very little risk if I'm going to do a market order before I get into my other um, orders. So 0.50, if I could take that trade, probably can't with this broker, as we can all see. It's too much. I have too much invested in gold, and my brokers are 1 to 5. So 0. Let's go 0.20. Okay, great. So I can open a 0.20. Might be a bigger lot when I update you guys in another video, but this is just for right now. So I have a 0.20 in gold. So my next step is going to be to place a stop right above the hard stop. This is my hard stop, so it's about 163 points away. So now I'm going to mark my soft stop, or my soft exit. So that's about a 1-to-1 right there. That's going to be my first exit, my nearest exit, which is also going to be right above the most relevant support zone. And that's all I'm going to do for that. So now I have to minimize this and reduce it. So where are areas that are going to have potential bounces in between? Well, I can see one right here. So this leg, I see A to B, B to C, C to D. So I know this is a completed wave. Price obviously had a potential to rise this high around 1733, which is reacting from there right now. And then it also has a couple more zones. If it fails this resistance, price will then shoot up and test the absolute highs around 1743. And if it fails that, it's going to climb up, break these resistances, and continue on towards the upside. So for me, I see A to B, B to C, C to D, complete a wave, okay, pull back. A to B, B to C, C to D. So my stop loss is essentially, it's going to be another 50 points above to stay in a safe zone, because sometimes you do have spikes up towards the top of the B wave, and right now I see a major A to D wave that is currently being formed on this time frame. It's a multi-day wave, and if you look at it, you see A to B, B to C, C to D. Now that C point, it was kind of choppy, so one thing that I normally do see sometimes is if price is on its way up, sometimes it will strike the highs of C before it goes down in a down wave to complete the new wave, just so it can build momentum. And all those traders that had stops right above C, they're going to get stopped. In reality, it's still, A, this zone right here would be A to B, B to C, C to D. And, you pick your own catalyst, you pick your own tools that you like to use in the market to really be able to identify these zones. But that's pretty much it for gold. So after all this is done, you guys can see I'm risking about 222 points for what looks like 222 points is being risked, and the reward is currently going to be 248, which is a little over a 1-to-1 reward to risk ratio. Now, this is going to be my first target. I do have a hard target. I do believe that this is weak support, and so if price does continue to crash below, we're going to look for the next target, which is going to be way down below at that point. The next target is going to be right here, which may be short-lived, and I do see gold continuing to melt towards 1417. There's no guarantees, but it was there at the beginning of the coronavirus pandemic, and there's no doubt in my mind that if it does continue down, it will hit there. But anything can happen between now and that price, so there could be another catalyst that comes into the world that changes the bias for the world. COVID, pandemic, vaccine, all of those keywords can definitely, terrorism, anything that's fair-based for the world globally, it can trigger another rally that we even seen, just this summer alone, we've seen a huge rally that changed the bias and shifted the world's bias. So, during times of panic and fear, we're going to see different types of moments like this. So, gold overall is bearish, but like I said, if you are currently looking, it's overall bullish. That's what I meant. Apologies for that. But there are times of fear, and right now we're in a bear market with a bunch of optimism as well. So there's a lot of hope. There's also a lot of fear, and as long as there's more fear in the world than there is hope, and at the moment there's more fear. We should see price continue to rise for gold, but right now, there is hope of the virus vaccine, so there's all this bouncing around. My advice, it kind of ties in with the counter trend video that I had last week, is to be able to identify the zones, the lows and the high of a potential range, and trade within that. So what do I see? I see a potential long-term range where the pandemic scare and just gold in general is going to keep on bouncing from lows to highs. So this does have potential to hold up, and if it does reach a resistance, it's probably going to hit around 1897, 1900 before closing back within the range. But I do see a slight range that started. I say the range started between this past March and end of May. We've seen the start of a potential range that shot down, showed some bearish momentum, then went back up, and now we're even in an even smaller range. Looks like a flag is being formed, but once this range does get squeezed to the absolute, then we're going to see a potential drive to the downside or even rally towards the upside. So we'll see what happens at the end of this year, start of next year. Q4 and Q1 is going to be very important quarters to pay attention to. But that's it for this video, guys. I hope this was very informal. I will follow up on gold in my analysis, and then a little future video. Maybe it's tomorrow, maybe it's the next week. It depends on when price reaches its points. But that's it. Hopefully you guys took some helpful tips from this video, and we'll talk next time.